Let's have a look at some various management accounting questions. And the first question we will have a look today at for Nutella Limited. So this question asks you to prepare the statement of profit and loss for the month using absorption costing and then using variable costing. And after that, you need to do the reconciliation. And a theory question, which you need to discuss the main difference between the absorption costing and the variable costing. So the first thing you need to do, you need to calculate the product cost per unit using the two methods, right? The product cost per unit using the two methods. Under absorption costing, if we calculate the product cost per unit under absorption costing, we have here direct material. So direct material is involved. We add it up because under absorption costing, what you need to add all the costs, including the fixed and the variable manufacturing overhead. That's under absorption costing, and that's why we call it a full costing system. Okay. So basically, now what we are going to do, that's direct material is part of it. Direct labor also is part of it. So that's we need to add this. We have variable manufacturing overhead. Also, we need to add it to calculate the product cost per unit using absorption costing. And do we need to add variable selling and admin? No, we don't add variable selling and admin because under the absorption costing, this is classified as a period cost, not a product cost. So, but what's next really? So we have the direct material, we have direct labor, and we have variable manufacturing overhead. So what's left? So we need to find out the fixed production overhead per unit. So if you look at the question tells you the fixed production overhead, but you need to find out the fixed cost per unit. So the fixed production overhead is 217,500. So in order to find out the per unit, what you need to do, this number, 217,500 pound, you need to divide it by the number of units produced, which is 4,500. So if you manage to divide this number over this number, you should be able to find out the price. So here we go. Let's find out. So fixed manufacturing overhead per unit equal. So that's 217,500. Then you need to divide it by number of units produced, which is 4,500. Okay, and that makes you around 48 pound and 34 pence. No, 48 pound. That's 34 pence. So that is the fixed production overhead per unit. So this number, you need to add it on what? On the top of these three. In this case, in order to calculate the product cost per unit, so the total product cost per unit under absorption costing method equal, you need to add 124 plus 134 plus 11 plus what? A plus 48.34. And that makes how much? That makes 317 pound and 34 pence. Okay, so that is the total product cost. That is the total product cost using absorption costing. And this number, we use it when we prepare a statement of profit or loss under absorption costing. Now, what is the total product cost per unit under variable costing or marginal costing method. So in this case here, what you need to do, right? So you don't include the fixed manufacturing overhead, the 48.34, because this is classified as a period cost under the variable costing method. So what you need to include really, you need to include all the variable elements of it, including we have material cost, we have labor cost, we have variable manufacturing costs. So these three, you add them all, these three, and that's classified. So variable for selling and admin, of course not, because these are not manufactured. So we're talking about only the product cost, the manufacturing cost. So we have all the variable elements, including direct material, direct labor, and variable manufacturing overhead. So if you add 124 plus 134 plus 11, you should be able to find out that it's 269. So that is the total product cost per unit under variable costing. So once you know that and you calculated the product cost per unit under the two methods, now you are free to prepare the statement using absorption costing. So when you prepare the statement using absorption costing, okay, the first one, when you prepare the statement using absorption costing, so you need to start with the sales. With what? With sales. So don't forget to write the name of the statement, so and the name of the company, because there are some mark, of course, in the exam. Nutella Limited, statement of profit or loss under absorption costing for a specific date. Okay, that's fine. Here we go. So you start with sales revenue. Sales revenue. If you look at the question, the sales revenue. So let's have a look at the question here. Selling price is £370, and the number of units sold is 4,200. So if you multiply them together, so sales you should find out the sales. Just 1 second. Okay, 1,554,000. That is sales. Now you need to less cost of sales. Okay, less cost of sales. I'm not going to make the statement completely tidy. I'm just trying to show you some working, guys. Okay, so we have opening inventory, we have here. We add the opening inventory. How much opening inventory, guys, we have in the question? 0. We don't have any opening inventory. It's 0. Plus purchases, add purchases. How much purchases? So you need to multiply the number of units, produced times the product cost per unit. So the product cost per unit is 317.34. So that is the product cost per unit. If you multiply it by the number of units produced, which is the 4,500, that gives you how much? That gives you 1,428,030. So almost 1,428,030 pounds. So now minus, you need to take away the closing inventory. So add minus now closing inventory. Okay, so how to calculate the closing inventory? It depends on how many units left. So if you look at the question here, so the number of units produced for 500 and the number of units sold for 200. So what's the closing inventory? 300 units. So this is 300 units. You need to multiply it by the product cost per unit, which is 317.34. And in this case, you will be able to find the closing inventory, but you need to bracket because this is minus, must be in bracket, And the answer is how much? 95202. Yeah, that's it. So here we go. So that's cost of sales. So opening inventory plus purchase minus closing inventory. That gives you cost of sales of how much? That gives you cost of sales of 1,332 and 828. Okay. And now gross profit. Okay. Okay. Gross profit. Gross profit equal. So 1554 minus 1332, 828. That give you gross profit of 221 and 172. So that's a gross profit. That is the gross profit. So under absorption costing, what's left at the end, you need to take away or deduct the period cost. And the period cost consists of the selling and admin. So anything period cost, non-manufacturing cost, we need to take it away. Okay, so here we go. So under the list selling and admin, so what we have under selling and admin here, let's have a look. So if you look at the question here, you can see that under selling and admin, we have, right, where is it? Here we go. Oops, we have fixed selling and admin. We have fixed selling and admin, 115,200. Okay, let's write it down. So that's fixed. We have fixed selling and admin, which is 115,200. And we have variable selling and admin. We have variable selling and admin. So how to calculate variable selling and admin? So if you look here, so variable selling and admin is £15 per unit sold. So that's £15 variable selling and admin. You need to multiply it by what? You multiply it by the units sold. The units sold, not produced, sold. And that gives you 63,000. Here we go. So the total would be then 178,200. Okay. And the profit would be, how much? So 221 minus 178,200, that gives you 42,972. And that is what? That is the profit for the year. Profit for the year. Okay. That's a profit for the year under the absorption costing. Under the absorption costing. It's really simple, straightforward. It's not too much complications here, to be honest with you. So now let's come to calculate the statement of profit or loss under marginal costing, or we call it variable costing. Okay, here we go. Let's have a look. So what I'm going to do first, I'm going to kind of just copy paste this, maybe. Yeah, maybe just copy paste this. Yeah, let me copy paste this. So what we have here. So here we go. Let's find out. So sales. Okay, right, here we go. Let's start with doing the variable costing. Sales, there's no change of sales, of course, because sales is sales, isn't it? There's no change because sales doesn't change under the two methods. That's fine, no worries. It's okay. Now opening inventory is 0, is the same. Now that purchases, what you need to do now, instead of multiplying by 317 pound, 0.34, now what you need to multiply by what? you multiply by the product cost per unit under variable costing, which is the 269. The 269, you multiply by the number of units produced, which is the 4,500 units. How much that gives? That gives 1,200,500. Okay. So minus closing inventory, as I mentioned, we have 300 units as a closing inventory, and this is 300 units. You multiply it by the product cost per unit using the marginal or variable costing, 269, and that will give you a closing inventory. So the closing inventory would be how much? Would be 80,700. So in this case, the cost of sales, if you add the cost of sales, that give you so far 1,129,800, isn't it? 1,129,800. That's great. Excellent. So now before we calculate the gross profit, what we need to do, because we are doing the variable costing element, so we need to add the variable selling and admin, right? Did you remember the variable selling and admin, the 63,000 pound, the calculated under the absorption costing when we put it under period cost here at the end? This 63,000 needs to be added here. So add variable selling and admin. So add variable selling and admin. How much variable selling and admin is 63, isn't it? 63? Yeah, 63. Yeah, 63. Right, so adds that 63,000 pound, and that makes the total 1 million, because you need to add it. That would be 1 million. Okay, 1,192,800, is it? Yep. Here we go. Right. Okay. So that number. So if you take away 1,554, if you take away the 1,192,800, that gives you gross profit of 361. From 361. 200. 361,200. That's 361,200 pound, and that is a gross profit, and that's under the marginal costing. But under marginal costing, variable costing, we don't call it gross profit, we call it contribution margin. So that's the difference between the two methods, the contribution margin. Okay, sounds perfect. Excellent. So now what's left here? You need to add up all the period cost. So under the variable costing methods, we have a period cost, we have a fixed manufacturing overhead. The fixed, anything fixed, including fixed manufacturing overhead and fixed and selling admin, that all should be put underneath there. So here we go. So let's fixed manufacturing overhead, which is how much is the fixed manufacturing overhead? Okay, fixed manufacturing overhead. That's how much? That's 217,500. Here we go. That's 2 actually. Here we go. That's 2. Actually, if you copy paste them and write them here, that should be fine. Yeah, these 2 actually. Yeah, that's it. Okay. Anyway, it's okay. As I mentioned, so you tidy up. This is just only explanation, demonstration. Anyway, so both these 217,115 makes 332. Right? Let me write them down. Okay, it doesn't allow me. That's fine. Oh, come on. It's annoying now. Okay, right. Let me see. Okay. 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 So the total is 332,700. Here we go. That's it. So the profit then, the profit 377. So profit would be the profit. How much profit would be in this case? 361 minus 200. So minus 332,700. So that makes 28,500. And that is the profit. And that is the profit for the year under what? Under variable costing. So here we go. As you see, what happened here? So the profit under absorption costing is 42,972, and profit under the variable costing 28,500. So that's expected, first of all, expected to be difference in profit between the two methods due to closing inventory. As long as there is a closing inventory, there is a difference between the two methods, and that's the main reason why there is a difference between the two methods, because of closing inventory, because there is a deferred in the closing inventory. And the expectation, if there is a closing inventory, we expect the profit under absorption costing to be higher than the variable costing. Again, let me repeat it again. If there is a closing inventory, the profit under absorption costing would be higher than the profit under variable costing. So the last thing in this equation, we need to do the reconciliation. To do the reconciliation, very simple. When you do the reconciliation, you always start with the variable costing profit, which is how much is it? 28,000. Yeah, 28,500. Then after that, what you need to do, you need to add the deferred in inventory, right? Here we go. Let me do it. Add fixed manufacturing overhead cost deferred in inventory. Okay. Okay. That's 2,500. So, okay, how do we calculate this? Very simple to calculate that. So how much closing inventory? We have 300 units closing inventory. What you need to do, you just need to multiply it by the budgeted fixed overhead per unit, which is, we calculated, I think, yeah, that's one, 48.34 times the 300. That's it. And that makes how much? That makes 14,502. Okay, so variable costing profit plus you add the fixed manufacturing overhead cost in deferred inventory, that give you what? Give you absorption costing profit. So absorption costing profit, which happens to be 43,002. Okay, right. Okie dokie. So, right. Okay. No, 1 second, not 43,000. 1 second. So we have 28,500 plus 14,502. That makes 43,002. Okay. That is the answer. In this case, we have here. Okay, let me calculate this. I might have some type on the calculator. 221,172 minus 178, 200. Okay, that makes 42,972, right? Okie dokie. Right, okie dokie. So in this case, there is interesting, right? Interesting. There is a difference in a profit. And that's one of the tricks here, guys, you need to look at. This really, really trick here. So this, you might be asked why there is a trick. So there is a slight difference in a profit under absorption costing, which is the 42,972 and the 43,002. Due to, very simple, guys, don't worry about it. That's only due to decimals. Due to decimals and fixed manufacturing overhead per unit, about the one we calculated is 48.34. So no marks will be deducted at all. So don't get confused yourself. So that's absolutely fine. They are absolutely fine. Correct answers. These are the differences due to decimals. So don't confuse yourself or go back or think you made a mistake. Okay. So here we go. That is a question number one. I hope it's understandable. I hope it's clear. And yeah, that's all really. Okay. So let's carry on with a question number, is it question number 2? Is that? Yeah, question number 2. Here we go. Let's now do it, question number 2. Okay. Okay, here we go. Right, question number 2 right now. Okie dokie. Right, let's have a look at question number 2 now. And the first one is the core difference between the variable costing approach and the absorption costing approach is the treatment of. So, variable manufacturing costs that are to be treated as period cost under the absorption costing approach. This is wrong because variable manufacturing cost is treated as a product cost, as a product cost, not a period cost. So this is wrong. Fixed production overhead that are not considered part of manufacturing cost under the variable costing approach and must be treated as a period cost. And that is true, right? Again, that is true. The fixed production overhead that are not considered as part of manufacturing cost. So under variable cost, we treat it as a period cost, as we just seen. So we bought the fixed manufacturing overhead under the variable costing method. We treat it as what? As a period cost. As what? As a period cost. And B is correct. Under or over recovery. When we say under or over recovery, we talk about mainly about under or over absorption. Yeah, over absorb or under absorb. Under or over absorption amount of fixed manufacturing overhead. So that's to do only with absorption costing, not variable costing. Fixed production overheads that must be considered as part of the manufacturing cost under the variable cost. Again, that's wrong, but don't get confused. Yeah, fixed production overhead that must be considered as part of the manufacturing cost under the variable cost. That is not considered under the variable costing, right? These fixed production overhead is considered under a period cost under variable costing. So don't get confused. So the answer is B. Question 2. Over an extended period of time in which the final closing inventory are 0, the accumulated operating profit figures reported under the variable costing will be, of course, is going to be the same as absorption costing. Why? Because under the so the difference between the profit in operating under the two methods, the absorption costing and the variable costing, is due to closing inventory. There is a difference profit. But if we accumulated the profit and at the end happens the closing inventory happens to be 0, there is no closing inventory, this means the profit under the two methods will be the same. Profits under the two methods will be the same if there is no closing inventory. So I imagine the answer would be B. Okay, here we go. for a given month, profit under variable costing is for 220,000. That's fine. Where 34,000 units actually produced. Okay, that's actually units produced. That's important. Okay, that's important. Opening stock, 15,000 units. That's opening stock. Closing stock, 12,000 units. So then the fixed production overhead is 150,000. That's important. We have to look at. And this absorbed using a normal output of 30,000 units monthly. 30,000 units monthly. Right. So under the absorption costing, the amount of under or over recovery, that's under or over absorption. That's what we mean by under or over recovery, under or over absorption of fixed manufacturing overhead will be. Right. Okay. Right. So what do you need to do really? First of all, you need to calculate the fixed manufacturing overhead per unit. Fixed manufacturing overhead per unit, which is, let's do it, 150,000 divided by how much units produced? 30, is it? 30,000. And that makes, oops, what's that? Where we? Okay, no, we are talking here, right? 30,000. That makes how much? That makes £5, isn't it? £5. That's fine. Okay, here we go. £5. Okay. So now £5 is the fixed manufacturing overhead per unit. Okay, okay, that's fine. Now, in order to calculate the over or under absorbed, now, what is now how much units we have extra above the budgeted units? Look here. We have here, when we budgeted based on 150,000 pound as a budget fixed overhead, we have 30,000 units. Budgeted is 30,000 units. That's fine. That's where you calculated why the fixed production overhead is being calculated. But now what happened really? The actual production was really more than 30,000 units. Now we produced the actual production units is 34,000 units. In this case, we are above. We are over recovery. It's over by 4,000 units. In this case, we are over by what? By 4,000 units. By what? By 4,000 units. In this case, 4,000 units, if you multiply it by the fixed manufacturing overhead, £5, you'll be getting £20,000. You'll be getting what? £20,000. So 4,000 multiply 5, £20,000. So now the question, we know that now £20,000, we know it's over absorbed, is over recovery. Why it's over recovery? Because the actual production, we produce more than we budgeted. That's why over absorbed. Now the question is, are we deducting it or we adding to the cost of sales? Of course, we deduct it. We take it away. Over absorb, we deducted. Okay, under recovery or under absorb, we added. So think about it. So if you have a different question, which tells you happens to be instead of over recovery, to be under recovery, so under recovery must be added to the cost of sales. But here in this example, so the answer is C, isn't it? The answer is C. Why under C? Because it's a £20,000 and over recovery, and that must be deducted because over recovery, over absorption must be deducted from cost of sales. I hope it's clear, guys. So make sure that you compare the budgeted units. You compare the budgeted units with the actual units. So question number 4. Kona company has no opening inventory and manufacture a single product. Right, that's fine. If the number of units produced, if the number of units produced exceeds the number of units sold. Okay, great. So if the number of units produced exceed the number of sold, this means we will have a closing inventory. And if we have a closing inventory, this means the profit under the absorption costing will be the higher than the profit under variable costing. So the operating profit under the variable method will be less than the operating profit under absorption costing, will be less. So the answer is C. The answer is C. And that's exactly what happened with us in the first question. When it happens to be there's a closing inventory, the profit under absorption costing happens to be more than profit under variable costing. So under operating profit, the variable method for the year will be less than the operating profit under what? Under absorption costing. Okay, so the answer is C. Right, here, question number 5. Okay, question number 5. For a given month, profit under absorption costing was 180,000, where 30,000 units actually produced. It's fine. Opening stock at the start of the month was 10,000 units, while the closing stock at the end of the month was 15,000 units. Fine. Fixed production or fixed monthly production overhead amounted to 150,000 and are absorbed using or to production are absorbed to production units based on the normal output of 30,000 units monthly. So based on this, so what is the profit under variable costing? Okay. Right. The only way we calculate the profit under variable costing is to use the reconciliation formula. Do you remember this reconciliation? Let me show you. This one, I think. Yeah, this one. Right. Here we go. Right. So basically, we don't know that. That's what the question asks you, isn't it? They want the variable or costing profit. You need to add the fixed manufacturing overhead cost deferred in inventory. So now we need to find out what is the closing inventory. So if you look here, you can see that we have 5,000, isn't it? 5,000. Because why? Because opening stock at the beginning of the month, 10,000, while the closing stock is 15,000. So basically, in this case, that is the closing stock would be 15,000 and the opening 10,000. That's fine. So that would be 5,000 units. Why? Because we produced 30. Okay, that's fine. So in this case, what we need to really to do in this case, so what is the budgeted fixed overhead per unit? So that's based on, where is it? Yeah, 150,000 pound. If you divide it by 30,000 units, which is the output, that happens to be £5. So the budgeted fixed overhead per unit is £5. So that's £5. You need to multiply it by what? By the closing inventory. Yeah, by the closing inventory, which is the closing inventory is what? Is 5,000. So 5,000 multiplied by 5 equal what? Equal 25,000. Let me write it down. 25,000. 25,000. So now we know the profit under the absorption costing. The question tells you the profit under absorption costing is 180,000. Here we go. In this case, if this plus this, if this plus this equal this, in this case, you should be able to know what's this, right? So this plus this equal 180,000, which is absorption costing. In this case, the answer would be 180 minus 25 equal 155,000. The answer is A. The answer is A. So the answer is A. 155,000 is the profit under the variable cost. Under what? Under the variable cost. Okay, dokie. I hope don't confuse yourself. It's really straightforward as long as you understand really how it works, really. Okay, that's great. Now let's move to the other few questions, multiple choice questions on various topics in management accounting, including mainly overhead allocation and ABC. Right, let's start with here question number 1. And question number 1 here, it tells you that absorption costing is a management accounting technique where, right, so it's all about what's all about absorption costing. Absorption costing is spread, it's the cost or the indirect cost, and that's all about it, absorption costing. So its indirect manufacturing costs are spread fairly across the range of products. So simple way to look at it. So absorption costing spread indirect costs fairly across the range of products. So the answer is A. The answer is A. Right, let's move to question number 2. Question number 2. What should happen to a blanket rate? A blanket rate is similar to overhead absorption rate, but a blanket rate is in general. As we calculate overhead or budgeted, just budget overhead just in general. It's not like OAR. OAR, overhead absorption rate, target each department to be more specific, more accurate, but blanket rate just in general, really. So it's not accurate, really. But anyway, what happens if this blanket rate, if production volume reduced? I mean, remember, when we talk about economies of scale, we talk about if production goes up, the activity is up, so the fixed cost per unit will be less. Yeah, the fixed cost per unit will be, the cost will be less. But on the opposite side, if the production goes down or the volume goes down, that the cost will be more, isn't it? The cost will be more. So that's economies of scale. So if you look at the answer would be B, I guess. The unit cost of a product would increase. Again, we all refer about the economies of scale. About what? About economies of scale. Okay? Because total fixed costs are spread over fewer products, to the unit cost will increase. Simple like that. So number 3. Why is the absorption costing or the absorption rate, or we call it the absorption rate, based on an estimate and not actual? Yes, that's correct. Actually, when we calculate the overhead absorption rate, so that's what is budgeted fixed overhead divided by number of labor hours or number of machine hours or number of units. It depends. But why it is based on estimate, not the actual? Because estimates are needed for business planning. So before actual costs are available. So there is not really enough time. So that's why it will be too late to make decisions, isn't it? So that's why we need that. We need this before we make such a decision. So think about it. Using actual rates is too late for many decisions, such as the pricing products. Think about it now. If I want to price a product, so I need budgeted pricing. I mean, how can I, if there's an order, okay, if I'm supplier and a customer came order thousands of units, so I need to tell them the price. before I make the product. So it's really, in a way, it must be to calculate based on the estimate. So, and that's why we have variances, and we have variances including adverse variances and favorable variances. Number 4, a company had under recovery. So under recovery means under absorption rate. That's under recovery of 200,000. That's fine. With a budgeted overhead of 1 million. If its estimated overhead hours were 20,000 and actual overhead hours 22,000, calculate the actual overhead cost. Right, so the way, you just need to follow the steps, really. It's not hard, but okay, let's start. So that's in order. First of all, let's calculate the rate, the budgeted rate, which is 1 million. Okay, 1 million divided by the budgeted hours, which is 20,000. That makes how much? Right, let me see. That's 1 million divided by 20,000. That makes 50. Okay, 50. Now 50, you multiply it by what? You multiply by the actual hours, which is 22,000 hours. And that makes 1,100,000. 1,100,000. Okay, 1,100,000. So the answer, of course, is not D, is not 1,100,000, because the question asks you what's the actual overhead, and the question mentioned that there is under absorbed by 200,000. So what you need really to do, guys, you need to add up. Yeah, you need to add up the 200,000 on the top of the actual overhead. Why? Because there is under recovery, under absorbed, and if there is under absorbed, we add it. If there is over recovery or over absorbed, we deduct it. So we have under recovery of 200,000. In this case, we need to add a couple of 100,000 here. And that makes 1,300,000, isn't it? 1,300,000. So here we go. This is the answer. The answer would be 1,300,000. So the answer would be A. The answer would be A. So this is the way. This is a step. This is the steps ahead in order to calculate the actual overhead. The actual overhead. Okay, right. Now let's move to question number 5. Now, in terms of question number 5 here, which is the proper sequence of events in ABC? I mean, when it comes to ABC, the ABC process identify activities, cost pools, cost drivers, and then calculate cost driver rates before assigning product cost. In this case, if we talk about the proper sequence of events of ABC, we talk about mainly B, isn't it? We talk about mainly B. So identification of activities, then cost pools, then cost drivers, then calculate cost drivers rate, and then cost driver, then assignment of cost to products. So similar like that. Okay, that is a proper sequence of what? Of ABC. Okay. Question number 6 asks you about also ABC, but this time it's ABC suits a company that has what? So mainly ABC, the company use ABC for 2 reasons: when they have diverse product range, and also when they have high fixed cost. So yeah, ABC suits complex organizations with diverse product range, particularly if some products have high volumes and other low volumes. So basically, So we talk about high cost, high fixed cost, and diverse product range. So basically, the best one we could see, it's A, I think, is that A? Yeah, that's A. So diverse product range, a diverse product range. So if it was high, I would go for high fixed cost, but it wasn't high fixed cost. So I will go with high fixed cost, but anyway. So if there's a question change, if the high fixed cost, that would be high fixed cost in this case. Yeah, that would be, of course, one of the things ABC does, of course. Yeah. Which is not the valid purpose of budgets. Is not. I mean, a budget is not the primary design to calculate the valuation of a company, as this would need information concerning a longer period than just 1 year ahead. So that's basically the thing. It's not the authorization of expenditure, yes. Motivation, yes. Assessing the performance of an organization, yes. But when it comes to valuation of the company, no, it's nothing to do with purpose of budget at all. No. So definitely, yeah, definitely not. It's not purpose of budget at all. Okay, here we go. Question number 8, which is the usual logical sequence of constructing a functional budget? I mean, when it comes to functional budget, is as the most likely limiting factor is estimated sales volume, as is logical to start here. I mean, we are talking, if we talk about the logical sequence of constructing functional budget, so we talk about the agreed level of sales volume and prices, calculated production levels, set raw materials usage, agree raw materials purchases. So we are going to talk about, I think B. Yeah. B. Yeah, it's B. Yeah, it is B. Yeah, it is B. It is B. What makes up a master budget? Now, when it comes to master budget consists of the following. Consists of a statement profit or loss, consists of a statement of financial position, and also from the cash flow statement, also from the cash flow statement. So that is the master budget. Right, okie dokie. Next one, number 10. What is meant by zero-based budget? Zero-based budget is one of the budgets that you start from scratch and you prepare it every year. You need to justify the expenses, the activities, you allocate the resources in an efficient way, and it's costly, it takes time. So yeah, so basically if you look at these answers, and the best one would go for, of course, B, isn't it? Because B, it tells you that the budget is prepared from first principles, isn't it? Oh. Okay. So zero-based budgeting starts from scratch, as I mentioned, without using any information from previous year's budget to calculate each number from first principles. From what? From first principles. So that is all about zero-based budgeting. Now let's come to number 11 now. Number 11, which can be considered to be advantage of top-down budget. I mean, we have two styles. We have top-down and bottom-up, and you need to distinguish the difference between them. Bottom-up when the employees are involved in setting up a budget. Of course, that advantages give them a motivation to be involved and be responsible, and they are committed and they will be a part of the budget, and that's amazing. So the disadvantage, of course, would be that they might not see really the whole picture of the organization, and they might really give not the right strategy on the business. That's a bottom up. The top down budget, where the senior management impose the budget on others, and the advantages there, of course, there's a lot of advantages, including that these senior management, they know that company, they can see, they have the strategy to look around. In terms of the cost, there's only less people, they can do it the budget quickly, only involves a few people. Of course, disadvantage is that it's kind of like it's type of autocratic style leadership, but here we go. So of course, if we look at a top-down budget is imposed, as I mentioned, by senior management, and it's less likely to have many iterations with long negotiations between staff. So if you look at the advantages from the points we have, A, B, C, D, of course, we are going to go with D, isn't it? Yeah, we're going to go with D, which is the cost effective to produce, as it involves only a few people with less negotiations. Okay. So question number 12. Question number 12. A firm has produced the following budget for an activity level of 5,000 units. So we have materials, £45,000. We have labor, 60,000. We have salaries, fixed cost, 25,000, and depreciation, 12,000. So basically, from the one we locked, materials and labor are variable cost, and salaries and depreciation are fixed cost. Here we go. What would be the cost or the total cost for a level of activity of 7,000 units? 7,000 units. Okay. So what do you need to do really to calculate it? First of all, we need to find out the variable cost per unit based on what? Based on 5,000 units. So here we go. So we have the 45,000 plus 60,000 and then you divide it by how many units? 5,000 units. Okay, how much you get? So that's 45,000 plus 60,000. That's divided by 5,000 units. That's £21. Okay, that's £21. So the variable cost per unit is what? Is £21. So this is £21. You multiply it by what? By the new units, which is 7,500 units. Oops, what's that? Seven 7,500 units. And that makes how much? 157,500. So here we go. That's the total variable cost. It's the total variable cost. Add up the total fixed cost, which is the salaries and depreciation. So why we add them here? Because these fixed costs are fixed costs regardless we produce 5,000 units or we produce 7,500 units, we're still having the same fixed cost, salaries and depreciation. And that makes 25,000 plus 12,000. That makes 37,000. Here we go. So 37,000 added, that's 194,500. That, okie dokie, here we go. You just put there. Okie dokie. Nice, here we go. Right, guys, so the answer would be 194,500, the total cost based on the level of activity of 7,500 units, and the answer is B. The answer is B. Okay. I hope it's clear. I hope it's clear. You manage just a way, just simple simple steps to move ahead and do it. Question number 13. The following details are available for a company. So gives you here some budgeted data, including the expenditure, machine hours and labor hours, and also some actual figures, including the expenditure, machine hours and labor hours. And the question asks you to calculate what are the overheads if the company absorbs using machine hours. If the company absorbs using machine hours. Okay, so here we go. If we follow the same steps, so the 193,600 divided by 4,400. Okay, so that makes how much? Let's see. That's 193,600 divided by 4,400. That makes £44. Okay, and then after that you multiply £44 by the actual machine hours. We're talking about machine hours only. Why? Because the question asks you for machine hours. Yeah, so that's 44 times machine hours, which is how much? Is it 5,000? 5,000. Okay, how much you get? Let's see. Right, you get 220,000. Okay, 220,000. Okay, right, 220,000. But now look here, what the actual overhead gives you here, 252,000. Right, this means we are up by how much? 252,500 minus 220, that's 32,500. That's fine. So 32,500. So the answer would be A or C. A or C, because 32,500 pounds. But the question is it over or under absorbed? That is the question. Is it over or under absorbed? So of course, if it's up here, 220, but it's up 252, isn't it? So we are kind of like, if it does increase, if we add it, this means it's under absorbed, isn't it? We under absorbed. If we add it, we under absorb, because under absorbed we add. If it's over absorbed, we take away. So here we add it. So from 220 become 252. So we added 32,500. If we add it, so that's under absorbed. So under absorbed we add. So the answer is A. The answer is A. The answer is A. Okay. Right, okay. So that's question number 13. Now let's move to question number 14. For question number 14, guys, there's the details for the business, including budgeted and the actual figures. So expenditure, production units, how much is over or under absorbed? How much over or under absorbed? Let's have a look how we calculate this, guys. So first of all, same stuff. We're doing the same stuff. 375,000. You divide it by the number of production units, which is 15,000. Oops, why is that? 15,000. Okay. How much you get? £25 per unit. Okay. And then from 25 per unit, what you need to multiply by what? By the actual production units, which is 17,000 units. Okay, and that will give you 425,000. 425,000. Is it? Yeah. Right. So now, again, Now 425,000. That's the actual overhead. But if you look here, the actual overhead is 418. So the difference between 425,000 and 418 is 7,000. So now we need to limit our answers to B and C, isn't it? So B and C, 7,000. So the question is it over or under absorbed? Now think about it. 425 and now 418, right? So it's basically, we are what? We added or we deducted? We deducted. From 425, we deducted 7,000. If we deduct, so that means you are over absorbed. If you deduct, that's over absorbed. Okay, so the answer is C. The answer is C. The answer is C. Okay, good. So question 15 about overhead allocation. If you look at question 15 here, a factory has 3 departments, and rent for the year is 350,000 pounds. That's the rent for the year. Okay. The departments, they occupy the square meter. This is the basis. So department A, 4,000 square meters. Department B, 5,000. And department C, 1,000. So if you add them up all together, that's 10,000 square meters. Okay, that's 10,000 square meters, isn't it? Yeah, 10,000. Okay, great. That's fine. Okay. What are the compound rent apportioned to department B and C together? So this is overhead allocation. So what you need to do, you just need to combine that they ask for B and C. So if you want to do B itself, you might have different question ask you to do just only one, B or C. But how to do it? If you want to do B, for instance, okay, B 5,000 square, 5,000 square divided by overall square, which is 10,000, and you multiply by 350,000, the total cost of the rent. Okay, that's for B. For C, is the same. Is the same. 1,000 square divided by 10,000 square, and then you multiply by 350,000. Okay, so 5,000 divided by 10,000 square, then you multiply by 350,000, that make 175,000. And for C, that makes how much? Let's see. How much? Right, so we have 1,000 divided by 10,000 multiply by 350,000. That makes 35,000. 35,000. So if you add them up all together, 35 plus 175. So the total cost will be 210,000. 210,000. So the total cost will be 210,000 pounds. So I did, I did make them in separately, but you could do together. You could do 5,000 plus 1,000, 6,000 divided by 10,000, then multiply it. But I just want to show you, because if the question changed and they ask you just to calculate one department, B or C or A, whatever. But this is the way how to apportion and the overhead. Let's move to question 16. After the initial overhead allocation and apportionment has been completed, the overhead analysis sheet for factory is as follows. Okay, anyway, you will see departments, including production departments such as machine department and finishing and packaging. And we have two maintenance departments, or we call it non-production departments, including stores and maintenance. So the total overhead cost in each department, the total overall plus the maintenance hours, Okay. So the overhead cost of maintenance, so we're talking about here the maintenance then, yeah, are to be reapportioned to the other three cost centers according to the number of maintenance hours worked. So when it comes to overhead allocation, so after we allocate all the overhead costs, the final step, we need to reapportion the services department into the production departments. And now the question asks you that the maintenance, we need to reapportion the maintenance, which is 10,340. We need to reallocate it to the other three departments, based on the hours here. So what is the hours here? We have 3,800, 850, 50. So we don't include the 100 because 100 belongs to the maintenance itself. We don't include it. So if you add the hours here, which is 3,800 plus 850 plus 50, that gives you 4,700. 4,700. Okay. So in this case, what's really needs to be done, really, the maintenance cost to the nearest pound to the apportionment to the machining department. So we're looking for the machining department here only. To the machine department, we have a 24,100. That's the overhead cost. That's fine. We know this. So what we need to do now, we need to add up the new cost from the maintenance. From what? From the maintenance. Okay. So the way you do it is very simple, right? So we have 3,800 hours because that belongs to machining. You divide it over the hours, which is 4,700. And then you multiply by what? You multiply by the cost of maintenance, which is 10,340. So if you divide 3,800 divided by 4,700, and then you multiply it by 10,340, that gives you 8,360. Okay, 8,360. So the answer is 8,360. And that's related only to what? To the machining department, the machine department. If the question asks you for the finishing and packaging, what you need to do? 850 divided 4,700 hours. For the stores, 50 divided by 4,700 hours, and then you multiply by 10,340. That is the way. That is the way you go ahead. If the question asks you what is the total cost, total overhead cost, including the original one, then you need to add up the 24,100 plus the 8,360. So looking and reading the question is really important. It's really, really important to look at the question and read it carefully so to understand the requirement of the question. Okay. Right, question number 17. X Limited has two production departments. We have assembly and finishing. And we have one service department, which is the stores. That's fine. Stores provide the following service to the production departments. So the stores, 60% of stores goes to assembly and 40% goes to finishing. The budgeted information for the year is as follows. So we have budgeted fixed overhead, or we budget production overhead, including the assembly 100,000, finishing 150,000, and stores 50,000. And the budgeted output is 100,000 pounds or 100,000 units. So the budgeted fixed overhead or the budget fixed production overhead absorption rate for the assembly department. So we're talking about OAR here. So OAR. So what is the OAR? What is the OAR under for the assembly department? So what you need to do, we have the 100,000 here ready. That's fine. But what we need to do, we need to add up the reapportion 60% of the stores. So that's 50,000 pounds times 60%. You add it up on 100,000 and then you divide it by 10,000. Here we go. Let's have a look. So, right. So we have 50,000 pounds times 60%. Okay. So that's 50 times 60 equal 50,000 times 60. Okay, that's equal, of course, 30,000. That's fine. Okay, that's fine. Fine, that's fine. Okay, that 30,000 pounds. This is the when we reapportion the store into the assembly department. That's fine. So the question asks you to calculate the assembly overhead absorption rate. So in this case, 30,000 we have here. Add up the original overhead we have here, which is 100,000 pounds. Okay, that makes 130,000 pounds, and that is the total production overhead. That is the total production overhead for the assembly. So in order to calculate the OAR, which is the overhead absorption rate, so what you need to do, you divide it by what? By the number of budgeted output, which is 100,000 units. 1,000 units. And that makes 130,000 divided by 100, 1.3. Is it 1.3? 1.30. 1.30. That is the answer. 1.30. Okay, that's 1.30. The answer is 1.30. So be careful, guys. So what the question asks you, right? I ask you assembly. I might ask you for finishing. So the key here is you need to first reapportion the stores into the assembly or finishing, and then combine them both together to find the total production overhead for overall, and then you divide it by the budgeted output. By what? By the budgeted output. So this is the way ahead to do it. This is the way ahead to do it. Okay. Question 18. Okay, question 18. Dalton Limited has just allocated and apportioned all its overhead between its two production departments. So we have here two production departments. We have P1 and P2. And we have two services departments, including S1 and S2. S1 and S2. As follows. So we have the allocated overhead, including the P1, P2, S1, S2. That's fine. Okay. So what happened here? S1, which this one, okay, provides service to P1 and P2, right? This was S1 provides service to P1 and P2 on the ratio 2:1. Now S2, service department 2 provides service to what? To the three departments. So P1 as 1/3, 1 divided by 3, P2 half, and S1 1 divided by 6. Right. So the question asks you, what is the total overhead to be allocated and apportioned to the production departments after the reallocation of service departments overheads are to the nearest 1,000. So basically, guys, what you need to do here, so we need to do the reapportion. Again, under overhead allocation, so we have step 1, step 2. Step 2, you need to reapportion the services departments into the production departments. And that's exactly what we're going to do right now. Okay? So, right, what we need to do here, so that's P1, that's P2, right, and that is S1, okay? That's fine. Okay? Good. So, original overhead, for P1, how much? 257? 257. For P2, 378. And for S1 is 107. That's fine. Okay. That's the original overhead. There is no issue about it. Okay. And 78 for S2. Like, let me include S2, just make it easier for you, okay? Just make it easier for you, okay? Just S2. Okay, that's fine. So now what we need to do? First, we need to reallocate the service departments into the production departments. So what we need to do first, the S2, we need to start with S2, of course, because S2 is reallocated to the other three departments. So the 78 here is reallocated based on P1 third, P2 1 and 2 is half, and 1 divided by 6 as on. Okay, let's do it. So what I'm going to write here, I'm going to write S2 reallocation. So if you multiply 78, let's do it. 78 multiply 1 divided by 3, 26. And 78 times 1 divided by 2, that's half, that's 39, okay? And 78 times 1 divided by 6 is 13. Is what? Is 13. Now, S2 is what? Is minus 78. So it's minus, there's nothing there, isn't it? Because the 78 is already being reallocated. The 78 has already been what? Reallocated. So it's nothing S2. So now, what is the total right now? So the total the total for P1 so far, 257 plus 26 equal 283. P2, 378 plus 39, 417. And 107 plus, that's 120. Right. So that is the total so far, okay? That is the total so far. Okay. So now what's other job now? What we're gonna do now? So the 120, the S1, now we are going to reallocate it to P1 and P2, right? So now S1 here, S1, what we're gonna do with S1? S1 is provide services to P1 and P2 on the ratio of 2 to 1. So 2 belongs to P1 and 1 belongs to P2, right? 2 to 1 there. So in this case, 120 multiply, is it 2 to 1? This means 2 divided by 3. 2 divided by 3, that's 80. Okay. And 120, that should be 40. Is it? Divide by 1, divide by 3 is 40. Here we go. And of course, that will be minus 20 because it's minus 120 because it's gone, really. So now the total, the final total would be, after allocate everything, so that's 80 plus 283, that makes 363, and 417 plus 40, that makes 457. That is the final total. That is the final total, guys. Okay. So 363 and 457. So the answer is C. The answer is C. The answer is C. The answer is C. I hope it's clear how we really did it, guys. It's really straightforward, guys. I know it's a bit, I mean, I really broke it down here for you to really understand how did we get it. But it's really simple. If you know really how it works, really, it just must be really, really simple. The way to understand it, really, guys. So here we go. Remember that we need to reapportion. We need to reapportion this. Okay. So let's move to question number 19. Question number 19. Question number 19. Okay. Where's question number 19? Here we go. Helen makes a good profit on badminton rackets, which she usually sells for £30 each. This covers the full cost production, including variable cost 21. So £21. £21 here is the total variable cost. We need to make it there, and £38 here is what is the how much she sells the racket. Helen has a spare capacity, so is considering a contract with the following conditions. The contract price is £12,500, and that delivery cost £2,500, and the units 500 badminton rackets. Should Helen accept a contract or not? Okay. So now let's work it out if Helen is making a profit or making a loss. Let's work it out. Okay. Okay. Now what's all about Helen? Yeah, it's very simple. So first of all, so we have 500 units. You need to multiply by what? By £21. £21. The total variable cost, 500 times 21, equal £10,500. Okay, that's £10,500. That is usually the total variable cost, total variable cost. You need to add up the cost here, which is we have £2,500, which is the delivery cost. That must be added up on the top here. Okay. 10,500, 12, that's 13,000, isn't it? That's 13,000. Here we go. In this case, 13,000, and only they offer 12,500. So basically, Helen will make a loss, isn't it, of £500? And but this is a contribution loss, isn't it? That's a negative contribution of 500. So should accept? No, it makes a negative contribution of 500. It's a negative contribution, guys. It's a negative contribution of 500 because we're talking about the variable cost. Question number 20, pricing decisions. So company is considering submitting a bid for a contract to produce 1,000 t-shirts. The contract would be fulfilled during a quiet period of time in the factory where there is a printing capacity and the permanent workforce are not fully employed. Material cost 450, fine, per t-shirt. Delivery cost per t-shirt 50p. So that's both are £5, which is variable cost. Additional agency workers would be needed at the cost of £3,000. So that's additional agency workers needed. And this is an additional to the permanent workforce, which usually costs around £2 per shirt, £2 per t-shirt. How much should the company charge per shirt? Or I would say not charge. What is the charge? What is how much cost per t-shirt, right? So now think about it. Now we have 1,000. Okay. So you need 1,000, the total variable cost, basically, that's what we need. The total variable cost equal 1,000. Multiply what? Multiply £5. So that's £5, including what? Including the material cost per unit and also the delivery cost per unit. So that's £5. So that's total 5,000. £5,000. So now we have here plus we have what? We have £3,000, which is what? Which is agency staff. We need to bring agency staff. So that's equal £8,000. So if you divide it by 1,000 units, in this case, £8 that should cost per t-shirt. £8 should cost per t-shirt. So the answer would be this one, £8 per t-shirt. Now the question you will ask, okay, why did not I include this one, the £2 per t-shirt? I'm sure you're asking this question. Why is that? Very simple reason. We don't include it, of course, because this is a fixed cost. This is a fixed cost, so we don't include it. Because regardless, if we are taking this job or we are not taking this job, we are not going to include £2 because it's fixed cost. Regardless, these employees are fully employed. Permanent labor not included as because already employed. So it's already being paid. Regardless, if we produce, we don't produce, we're already being paid £2 per t-shirt. So anyway, so these fixed costs, and as you know, fixed costs are not included in relevant costs. So fixed cost is not a relevant cost. is not a relevant cost. So the answer is £8. The answer is £8 per t-shirt, and that is the cost per t-shirt. So now let's move to more question to practice here. And first question here we have, which of the following costs would be a fixed cost for a confectionery manufacturer? I mean, regardless, it's a fixed cost as fixed cost. Total fixed cost do not change with the production change. I mean, sugar, electricity costs to run the manufacturing machines, hourly paid wages, all of these are variable costs. The only one is fixed cost is the supervisor's salary. Supervisor's salary is a fixed cost. Which of the following is a definition for a variable cost? So variable cost do not change, variable costs do change with the production change. So this means the costs that vary directly with the number of units produced. So costs that vary directly with the number of units produced. So as I mentioned, total fixed costs do not change with the production change. However, the fixed cost per unit is changeable, because when the activity increases, the fixed cost per unit will be less. And that's what we call the economies of scale. With total variable costs change with the production change, but the variable cost per unit is fixed. The variable cost per unit is fixed. So you need to distinguish between these two terms. Right. Luke is arranging a party for a party to be held in student union. The use of the hall will be free, but there's a security cost of £300. So that is £300 security cost will have to be met. The cost of the main band, 2,500. And the supporting band will also cost 450. So that 450. Tickets will be priced at £15 each. That's the selling price. And on arrival, every ticket holder will be given a bottle of water worth £1 per bottle. And the question asks you, what are the total fixed costs? I mean, think about it. What are the total fixed costs? The fixed cost includes the security cost, which is 300, 2,500, the main band, and the supporting band, which is 450. Yeah, so that's 2,500, 450, 2,950 plus 300. So the answer will be 3,250. 3,250. So now the question you will ask me, why didn't we include the £1 per bottle? This is a variable cost, actually. This is a variable cost. So fixed cost, regardless if the event happening or not happening, that's what's gonna happen. But the £1 is only incurred in case that people come to the concert, okay, or the party. I'm not sure what type of party Luke is doing, to be honest with you. Right, let's see. Hopefully he will invite us. I will join if he invites me. So here, the same example with Luke, but this time the question asks you to calculate the break-even point. And what is the formula for a break-even point? If you remember, the formula is total fixed cost, which we know now, the total fixed cost, which is 3,250. You just divide it by contribution per unit. So what is the contribution per unit? Contribution per unit is the selling price per unit minus the variable cost per unit. So the selling price per unit is 15. And the variable cost per unit is £1. Is £1. This is only one variable, that's 14. Okay. So 3,000, let's work it out, 3,250 divided by 14, that makes how many tickets? 232, right? So the nearest one, 233 tickets. So that is 233 tickets. Okay. So the answer is D. The answer is D. So what does that mean really? That means that Luke needs to sell 233 tickets in order to break even. Yeah, in order to break even. Okay, again, Luke needs to sell 233 tickets in order to break even. This means to cover the cost, all the cost. Anything above the 233 tickets, Luke will start making profit of it. So that's the next question we'll ask you about Luke. Yeah, the same criteria, everything the same. But this time the question asks you, if Luke sells 400 tickets now, okay? If Luke sells 400 tickets as he anticipates, what profit will he make? Right, what profit he will make. Right, so now, we are gonna talk about margin of safety here, isn't it? Margin of safety. So the break-even point in units is 233 tickets. And if you remember that the margin of safety is the difference between the break-even point in units and the budgeted unit, the budgeted sales, which is 400 tickets. So the difference between 400 and 233, so 400, that's 167. So let's work it out. Why it's not working here? I don't know. Oops, what's that? No idea what's going on, but do my best now to see. Right. Okay, let's see. Anyway, that's 400 tickets minus 233 equal 167 tickets. Okay. So now the margin of safety is what? Is 167 tickets, right? That's margin of safety in units. Okay, that's fine. So now the question asks you, what's the profit? So the profit would be the 167 tickets. You just need to multiply it by the contribution per unit. And the contribution per unit is 14. Why? Because 15 is the selling price minus £1 is the variable cost per unit. And that makes 14, isn't it? So that 14, and let's do it. $2,338. So the answer is no A, no B. What is C and D? The other page. So that's D. The answer is D. The answer is D. 2338. Ooh, 338. Okay. Which of the following is the definition of break-even point? Break-even point is the point when it reached the business doesn't achieve profit or loss. There is no profit, there is no loss. So yeah, if you look at the options here, you can see that's the best one, to be honest with you, isn't it? The situation where neither a profit or a loss, or not a loss made, really. So the answer is C. The answer is C. Question number 7. Okay, right. If the contribution per unit is a £25 and the break-even point is 80,000 units, which of the following statement is not true? So that we talk about not true, not true. Right. So first of all, the selling price per unit is £55. and the variable cost per unit is 30 pounds. Actually, is it true? Why is it true? Why? Because the contribution per unit equal the selling price per unit 55 minus the variable cost per unit 30. So 55 minus 30, that gives you 25. So yeah, correct. First one is correct. Is it true? Second, the fixed costs are 2 million. Actually, it's correct. Why? Because if you calculate the break-even point yourself, which is the fixed cost, 2 million pound divided by contribution per unit 25 pound, you should be able to find 80,000 units, the break-even point in units. So yeah, the second one is correct, really. Is it true? You try it. C, to make a profit of 300,000 pound, 92,000 units would have been sold, right? How would have to be sold. So now that's the formula for targeted profit. If you remember the formula for targeted profit, which tells you that fixed cost, which is 2 million, plus the targeted profit, which is 300,000, you divide it by contribution per unit, which is 25 pound. That makes 92,000 units. So that is correct, actually. So that means that the company needs to sell 92,000 units in order to achieve a targeted profit of 300,000 pounds. So that's correct, actually. Final one, to make a profit of 500,000, 95,000 units would have been sold. So fixed cost 2 million plus target profit 500,000 divided by contribution per unit 25 pound, that doesn't make 95,000 units. So the answer is D. So D is not true. D is not true. Not true. Okay. So you need to try. Yeah, you need to try. Okay, cool. So next one here. Which of the following is the least, okay, secure margin of safety? Least. So least for a business to have, right? Basically least. So that, of course, margin of safety of 3,000 units and the percentage of margin of safety of 20%. So that makes it. So that's the answer, the typical one. It's the least one anyway. So it's obvious anyway. So the lowest percentage margin of safety of 20% is the least secure. Anyway, that's obvious. Anyway, okay, let's carry on, guys. So question Jenny. Jenny asked, you expect to produce and sell 7,000 units at 15 pound each. Each unit will cost 9 pounds to produce. So that's a variable cost. And fixed cost will be 60,000 pounds per annum. And what is the break-even point in units? I mean, again, what you need to do, you need to calculate the break-even point, which is the formula. You should be able to know the formula, which is the fixed cost, which is 60,000 pounds. If you add up, if you divide it by contribution per unit, so which is the 15 selling price per unit minus variable cost per unit 9. So 15 minus 9 equals 6. So 60,000 divided by 6, that makes 10,000 units. Is that? Yeah, 10,000. So the break-even point in units is 10,000. Means that the company needs to sell at least 10,000 units to break even to cover all the cost. Last question here. So which of the following is an underlying assumption of break-even point? So assumption of break-even point. The first one, cost can be easily be divided into fixed variable cost. Not really. Fixed cost remains static over a relevant range. No. The unit selling price will remain constant throughout the relevant range. No. Raw materials unit cost may be diminish with increased output, and that's correct. That's one of the assumptions is this. This is one of the assumptions of break-even point or break-even analysis. Now let's move to the some other questions here. Which definition best describes indirect costs? As I mentioned, indirect costs are those costs which cannot be directly associated with a product or service. So of course, the best one on the options here, I would imagine B. Indirect costs are those costs which cannot be directly associated with product or service. So that's called overhead or indirect cost. So the answer is B. The management accounting technique that spreads indirect manufacturing cost fairly across a range of product is called absorption costing. So absorption costing is the technique which manage to spread the indirect cost or all the overhead costs across a range of products. So that is absorption costing. What would happen to a blanket rate if production volumes increased? Blanket rate is a similar way of overhead absorption rate, but blanket rate is more generalized, really. It's not accurate as overhead absorption rate, because overhead absorption rate is more specific to a department, but blanket rate is just in general. Anyway, but that talks about if the blanket rate increased, so if the production volume increased, what would happen? So of course the cost per unit will be less. The cost per unit will be less. So the answer is B. And that's what we talk about, the economies of scale. The economies of scale. Because if the production increased, that makes the cost, or in specific the cost per unit, the fixed cost per unit will be less, and vice versa. If the production decreases, so the fixed cost per unit will be more. Okay. A business absorbs overheads on a direct labor hours basis, which were budgeted at 2,500 hours. So that's a budgeted hours with budgeted overhead of 56,500. So actual results were 2,350 hours with actual overhead 54,050. Calculate the over or under recovery or over under absorption. Let's work it out the same we did work out other. So 56,500, if you divide it by number of budgeted hours, which is 2,500, that make 226. Then you multiply it by the actual hours, which is 2,350. So that makes, how much makes 53,000, isn't it? 53,110, right? That makes 53,110. In this case, if you compare 53,110 with 54,050, so there is a difference of 940, isn't it? So that's just limit the options to 940. Yeah. So in this case, the question you need to ask yourself, is it over or under recovery? Is over absorbed or under absorbed? So of course, is it under absorb? Is it under recovery? It's the answer is A, is under recovery. Why it's under recovery? Okay. Now it is 53 and 10, right? And the actual overhead is 54. So this means we added 940. Yeah, we added what? 940. If we added 940, this means it's under recovery. If we deduct 940, this means over recovery. Yeah. So again, it is we added to the to added 940. So it's under recovery 940. Okay. So the next question here, it's a bit different, which is it's not different, but it just opposite to the previous one. So this question, a company had under recovery of £200,000 with a budgeted overhead of 1 million. Estimated hours or overhead hours 20,000, and the actual overhead hours 22,000. So calculate the actual overhead cost. Calculate the actual overhead cost. Right, let's work it out. So now should be straight away. Let's see. Right, so that's 100,000. 100,000 is 100 or 1 million? 1 million actually, is that 1 million? 1 million divided by budgeted hours, which is 20,000 hours. So that makes 50. And then 50, you multiply by the actual hours as usual, 22,000. And that makes the 1 million. 100,000. 1,100,000. Okay, that's it. So as you see here, so the question we need to calculate the actual overhead. So there is a under recovery of 200,000. In this case, if under recovery, we added up. So we added up on the top of 1,100,000. That will be 1,300,000 is the total actual overhead. So the answer is D. Okay. Next question. In absorption costing, what are the allocated costs? Allocated costs are usually associated with the department. So if for example, if a manager who takes salary only works for a single department, that's the allocated cost. So the best one would be A. The cost that can be directly associated with a department. That means allocated cost. What would be the most appropriate way of approaching depreciation across different manufacturing departments in a business? I mean, so there is no right or wrong answer, but usually depreciation is being apportioned basically using the value of the building and equipment. So the net book value, using the net book value. For example, rent apportioning using square meters, heat square meters. Okay, so it all depends really, floor space or square meters really. So salaries, for instance, depends on the number of employees or how many hours work in each department. So it all depends really. Each business has a different way to calculate it. Okay, so number 8. Is it number 8? Yeah, number 8. A company manufactures high quality China plates. Oh, that's good. So at least we have some equality there. Plates. I thought we don't have equality here, but anyway. So, which are hand painted. Nice. It has a budgeted overhead of £20,000, taking 150 machine hours and 800 direct labor hours. So, right. Each plate uses 3 pounds of direct material, 0.25 labor hours, and we pay per labor hour, £10 per labor hour. And we have each unit requires 0.2 machine hours. And the question asks you, what is the cost of a plate? Right, interesting. So when the question asks you what is the cost of plate, in this case, we need to include all the costs, including the variable cost and the fixed cost. Right, let's have a look, guys. So we have direct material. Direct material, how much? Here we go. It just tell you £3. There is no issue about it. Direct labor, how much direct labor? Direct labor is £10 per hour. That's fine. And each unit takes 0.25. 0.25. Okay. In this case, is it 10 multiply 0.25? Okay. How much you get? Oh, what is that? 2.50. 2.50. So that's direct labor. 2.50. Yeah, that's direct labor. £2.50. Okay. So now what's really next? We have direct material, direct labor. Now what's next really? Just overhead. Overhead. Now the question overhead. So how can we because the question tells you the budgeted overhead 20,000, which is fine, but how can you absorb the overhead? That's the question, because the question gives you the machine hours, 150 machine hours, and also the question gives you the number of labor hours, which is 800 labor hours. The thing, which one you're going to pick up, that is the question. So you're going to pick up the highest, right? You're going to pick up the highest. So you're going to pick up the 800 direct labor hours. So we are going to absorb the overhead using what? Using the labor hours. Using what? Using the labor hours. So 20,000 pounds divided by 800 hours. How much we get? First one, 25, is it? 25, I think. 25. And then this is £25, and then this is the OAR. We call it the OAR, overhead absorption rate. Then in order to find the overhead, you just multiply it by the labor hour per unit, which is 0.25. 0.25, is it? Right. How much you get? I think 25, 6 point something, I think. That's 6.75 or 6.25. 0.25, I think. Yeah. Here we go. So 3 plus 2.5 plus 6.25, that's the overhead. That makes, I think, 11.75. 11.75, yeah, 11.75. So the total cost, including the what we call it, the variable cost, material, labor, and also the overhead, including 11.75. 11.75. Okay. Okie dokie. Right. This question number 9, which of the following factors is considered to have influenced the development of ABC? I mean, ABC, when it comes to activity-based costing and ABC, it is it's being done because of there's a lot of examples, a lot of reason why, but mainly because of the overhead cost become really complex and increase. The fixed cost or the overhead cost become complex and they increased and compare as a proportion of total product cost, as a proportion of total total product cost. So yeah, so the typical answer would be D. Okay. And question number 10 here. Which of the following is considered to be a benefit of ABC? I mean, of course, ABC has a lot of benefits, and one of the benefits that compared with the traditional absorption costing that gives the cost, calculate the cost, be more accurate when it comes to calculating the cost. And also when it comes to ABC, it just makes reduce the complexity of calculating the cost. When there's a business with overhead costs, if the overhead cost is really high, so that ABC would be the best. So if you look here on the points here, I imagine that B would be the best for reduced complexity of calculating cost. So that's a question number 10. So the key here to practice as much as you can. The more you practice, the more you are confident. Look at the questions, read the question carefully, read the requirements carefully, because it's not about you answer the question, it's all about you understand the requirement. Because if the requirement change, you should be able to answer that question. Thank you. All the best, guys. Bye-bye.